46 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Today we'll be covering the Fed. I'm going to do a number of things on longer term aspects of the markets once we get through all the Fed noise. So let's get into today's video. Well, welcome everyone. If you were at last night's disastrous stream, then I apologize again. I ended up deleting it. I was scrubbing through it, and there was just so many errors and things that were happening. I've rebooted the machine. I've got the Mac rebooted, and we got a clean slate, so we can go today. So don't expect much. I mean, the markets are we're up $1.75 right now, and not much going on there. I do have a setup so we can. I'm still getting a few things set up as far as some of the things that we'll be able to look at here. Let me just double check. I brought in on purpose here. Let's see how this works out. I brought in TradeStation, so we may do some trading today. Did some trading last night and early this morning, but now we've flipped over to down 175. So as we get closer, listen, I don't think this meeting matters at all. I'm not sure there's any meetings that are going to matter at all. I don't know how. I think about how frustrated I think after the government shutdown and all of the other things that came about were pretty frustrating to go through, and then the whole thing was revealed, right? That these reports and things we're getting, they're pretty much worthless. I mean, we operate in this noisy environment, acting as if we can decipher whether what's going on in the markets are worth listening to. And we found out after 40 some odd days of being shut down that they aren't. The markets seem to do just fine. I continue to, maybe it's wishful thinking, but I think we're at that phase where it's not just me. I'm one of the old guards leaving the game. A lot of you younger guys are taking over here, and you got to be. I mean, when you look at things from a 2025 perspective, they're doing stuff right now the same way at some of these agencies, the BLS and all of these guys. They're doing things the same way they did it when I started in 1979. So it's time. It's time for a change. It's time to embrace the technology. I want to see a more real-time kind of analysis of the markets, not these big, these quarterly shifts, and maybe you need to give things time. You don't need to be fine-tuning everything. But the bottom line is certainly something more accurate, more timely than what we've been operating on. I mean, just think about the last 5 years. The markets have completely shifted since the pandemic. That really was the great reset. A lot of things got reset, except for these things I'm talking about, where we're not even, we're looking so far in the rear view mirror, it doesn't matter. So what is, let's see what time we got. So I keep track here, we got about 15 minutes to go. What is it that, Powell's going to talk about today? What the media has made tried to make a circus of the show, because not everybody agrees. Well, they're not supposed to agree, right? So it's like this big deal. The Fed's divided, and I don't know why. I'm going to blame you millennials, okay? Just because you guys are running the news cycles and all of that. You know, there's still us boomers involved at the upper end of these news organizations, but these are all things. You know, everything's a drama, and you know, and I'm not sure that's the best way to introduce. Maybe, you know, the emotion get just infused into the markets as much as they can. Maybe there was I think there used to be an old comedy show. I'm going to show my age, SCTV. I think John Candy, other folks were on there, but they did I always remember this. I've been trying to find it for years. It was a commercial called, for a brokerage firm called Payne Grader. And instead of Payne Weber, it was Payne Grader. And they would say, they would go through this little reel about commodities, stocks, all this stuff. Sound confusing? You betcha. That's how we want it. We want it to be confusing so you have no clue what to do. And this whole, I wish I could find that. It was great. It was like maybe a 30 or 60 seconds spot. It was supposed to be a spoof advertisement, and it was so spot on, though. It's exactly what they want. They want confusion. And if you think about all of us that are on here that have traded for a living, or you know, for a hobby, or whatever you call it, you've been into these cycles where things are just really confused. Right now, it's just really boring. Okay, we continue to just be waffling in this range. So anyway, I'm bringing some other tools here today. We'll see how long we hang out together. How much you folks are involved will help a lot as well. So you know, keep the chatter going, ask questions, put stuff out there, so there'll be things for us to go through. But I think what we're going to hear from the Fed, from Powell and his little statement, is that they're still concerned about inflation. They're still concerned about the tariffs. Somehow they're concerned about that. I think they've collected well over $500 or $600 billion of tariff money. And now the farmers are benefiting, and supposedly there's more. We'll see what happens. I think as we look at basically 1 year into the Trump administration, I would give it mixed results at best right now. It seems very disjointed in a lot of areas, but you know, maybe that's how they want it too. So like I said, the best time of trading, think about how well the markets traded during the government shutdown. Couldn't have been smoother. There was no noise, no gaslighting, no all the talk, and we even put these stupid shows on to listen to this noise. You know, I usually have I have Bloomberg on because they have lots of prices on the screen that sometimes are interesting. I very seldom have the sound on at all. They just, yeah, they're just constantly promoting, you know, anything that's anti-Trump. So, so yeah, well, like I said, I apologize about what happened last night. Again, I'm not sure. All of a sudden, things set it down. So, you guys, if you have any questions or anything, yeah, Todd's right. Businesses don't like to waste time filling out surveys. They even give a shit information or nothing at all. Hey, Larry Hill from Valparaiso. Just looking here. Yeah, Floyd. Yeah, I mean, this is the kind of stuff, for 25 revisions total 482,000 minus. That's an average negative 69,000. I mean, what? I mean, seriously, what are they doing? Don't they question himself? Remember, it was what, 900, double that last year, so it's cut down in half. But this was some of the things that when we got that revision, I mean, I was revolting against all this noise. And like I said, if you go back to the government shutdown, the best that we were able to trade and look at stocks and look at earnings and all that was when we didn't have all the other noise. And we still don't have all the noise, right? We still don't have, I think, is it next week? I think we finally get employment numbers. We're never going to get October. So I really thought there were some guys sitting in a back room collecting this data. So that also shows you how important it's not, right? They don't even keep it going no matter what. There's nothing that's that important. So anyway, we've got, I guess what am lobbying for is a new way of collecting data, a new day of reporting data, more certain things should be reported more incremental instead of, waiting maybe a whole month. It's just like they get the claims data actually seems to be reasonably good because that's coming through filed claims and there's some touch points there on the data that looks like it's not a survey, and surveys are a joke. We all know that. So yeah, anyway, I'm done with that. What I'm going to do, since I cannot put this stuff on the TV, I don't have the other camera hooked up, or I might be able to, but I'm just going to put the sound. We'll listen to the sound. We'll watch the market trade as the sound is going. So I'll just use TradeStation level 2. Let me do one thing here. Yeah. Okay. David, we are working on something that it's going a lot slower than I wanted to, just because of things that have been going on with my life the last several months. I've lost it, but we're probably looking at putting some sort of update out on Portfolio Expert and WaveTech. One of the things I do have on WaveTech that is probably closer to release is I have some AI modules, TSX modules that you can input some of the information in there. Yeah, so I'll go ahead and put these, they're not doing anything. We're 50 cents, so we'll just leave this on while I'm talking. But I'm just coming up to talk about some things so you guys could pay attention. I know your span of attention is fairly. Yeah, we'll do some stocks later on here. Yeah, so you're right, Todd. See, that's like the ADP guys, they probably have a decent, but they could probably put something together, do even better collection of data. There's just a lot. I mean, it's 2025, and you know, they're still using surveys. And the other thing the Fed needs to start to get some indicators that are going to be, you know, forward-looking instead of always looking in the rearview mirror what happened and guessing what happened when a lot of times they know. So, yeah, I'm going to test something. We're about 5 minutes out, so let's test. Let me know. I'll be able to see, but that you can understand, and that this for audio works when they read the statement, and then when Paul comes up, we'll do it then. So let's give it. Hang on. There's a commercial, so I'll wait till after that comes in, and we'll test the sound here. But yeah, you can see, you know, down about -325 to unchanged is where we're hanging right now. We'll see what kind of response we get. Exactly. Sleeper Cell is absolutely right here. They don't want to collect accurate data because that would mean transparency and provide true discovery. You know, I keep thinking, you know, being around these markets for nearly 50 years, that something would change. And I can't tell you other than decimalization and the digital age that came in, that was good. But I remember back when I went to visit, I used to work for a hedge fund in San Francisco on the Pacific Options Exchange. And I went back, I'd left in 93. And I went back, it was like 99. I was sitting down with one. He goes, Bobby, it ain't like it used to be, this decimalization. No one's taking any risk anymore. So they killed the market makers, and that's why we got all the market makers for the most part are computers now, right? So they're making size off inventory, and algorithms are, when people talk about, you know, all this trading is being done with algorithms, it's actually the market making side of things. And yeah, I did something with a buddy of mine once that we basically manipulated a little penny stock from about $1.10 to like 205, almost a dollar rally. And I had 2 accounts, and we were working the 2 accounts, and we were just laughing as we were causing the dog to, the tail to wag the dog, because the algo was responding to these accounts, and we maneuvered the market and got out fairly good. But I actually got a letter from Fidelity saying that it looked like I was manipulating price. So they figured out what I was doing. But if you've ever been in a market making situation, you know how to do those things. See what else what we got here. Yeah, we got 2.5 minutes. So let's go ahead and get the sound going here, and we'll get a response, and we'll come back up, and we already know what it's going to be. Let me know if you can hear everything okay.
Today, don't lose this one. GE Vernova is up 15% pretty much to a record intraday high.
Give me a thumbs up or something.
Shares have more than doubled this year. The company issued strong guidance at its investor meeting. That'll do it. Key to that guidance, Brian, multi-year demand for electricity from some of the world's biggest tech companies. This is one of my favorite stories. I mean, we don't have time right now. But the GE spinouts and how well they've done. Vernova, which was supposed to be a wind company, now is doing as well as it is fascinating.
Well, turbines. All the money is in turbines. You want to power that through a pipeline, through it.
All right. Well, yeah, so somebody's talking about TradeStation. This setup screen that you're looking at, I've been using since 2000, probably 2003, and I've been on TradeStation since 1992. And in fact, there's code that I wrote in the 90s that is in and some of the user studies. I was mad at Bill Cruz because he stole some of my code. Anyway. Okay, audio's coming through. All right, thanks. Yeah, I'm trying to get back in the game here, so we're about a minute out, and I think there's a little bit of delay. I think Bloomberg's got like almost a minute and a half delay. It's terrible to watch. Yeah, 416 on the 10-year. Yeah, I forgot to hook up the other camera when I got back from my trip. Although I could put it on the screen, but it'd probably be delayed anyway, so I'll leave it like it is here. Oh,
If the labor data
it must be out.
weekend, if
We're
it's
getting a
soft,
pop here on the
and
screen.
January is very much on the table.
So this
If
is
it
all
doesn't,
delayed
then we're gonna kick the can
20
down the road.
seconds.
Yeah, we're going to find out here in about 15 seconds. Like we said, it is a mixed trade. You got the NASDAQ slightly down, the Dow slightly
So we're
higher.
up
10-year yield
10,
right
11.
at 4.16%. Let's go down to Steve Leishman on the Fed's decision on interest rates. Steve.
The Federal Reserve reducing interest rates by an expected quarter point to a new range of 3.5 to 3.75. There were 3 dissents. The first time that's happened.
Yeah, I put a little short on here.
2 were against the cut, including Chicago Fed President Austin Goolsbee, along with Kansas City Fed President Jeff Smith, his second dissent in a row. Also, another dissent for a 50 basis point cut from new Fed governor on loan for the administration, Stephen Myron. To recap, the vote was 9 for cutting a quarter, 2 against cutting, 1 for cutting 50 basis points. The Fed signaled a higher bar for the next cut, using language that it's used in the past to do so, saying that it will assess incoming data to determine the extent and timing of future rate moves. That language it used it last December to signal.
I just put a small trade. I got about $2,000 profit.
Just 1 more cut next year and 1 more in 2027.
I'm closing that out. So
a lot of disagreement.
I always do that scalp.
I want to talk about some pretty big news when it comes to the balance sheet. The committee making a determination, it is now at what it calls an ample level of reserves. So it plans to initiate purchases of shorter-term treasuries on an ongoing basis. And then a separate document was specific, saying the Fed will begin buying $40 billion in bills starting December 12th. That's just a couple days from now, and I believe that's sooner than the market expected. And those purchases will go on for a little while at an elevated level because of seasonal demands for reserves that are out there before coming down again in April. That's what the document says. Outlook on the economy in the statement. GDP outlook was stronger next year in the Fed's own forecast, up a half a point to 2.4%. So pretty big move there in the outlook for GDP next year. The inflation outlook lower for next year by just a tick, down to 2.5%, just about hitting the target of 2.1 in 2027. The statement says the economy is expanding at a moderate pace, job gains have slowed, and unemployment has edged up. Just a note, the statement no longer says that the unemployment rate is low at the current rate. Inflation is seen as somewhat elevated, economic uncertainty also elevated. Back to the Fed outlook in the dot plot real quickly here. Only 2 dissents, but 6 officials in total wanted no change in the funds rate according to the dot plot. So kind of a soft dissent in that regard, you can call it. 7 want no change at all for next year. 11 only want 1 cut next year. 1 person, and we can imagine who that is, Stephen Myron, just guessing here, wants rates down to 2.12% next year, or 150 basis points lower. And that is the statement and the outlook for rate cuts and
All right, so pretty much what we expected. I, you can see I did this quick trade because whenever the market, this was a trade that I have been doing for a long time, where I fade, like you get a spike up like that, you let it play out, and then you take the other side. So in this case, I sold it and I scalped out. I don't even know how many I had on it. I think I had about 10 contracts on, or so. I made a few grand, just a quick scalp out of there. But the same thing always happens here, is over on the far right-hand side, we get this explosion of volatility. Now, what's on this page in the middle is a 5-minute chart. On the outside is the 1 minute. So let's go over here, and this is my favorite chart. You folks have seen it before. This is a 5-second chart. So, and I like to put this up here because it demonstrates what goes on with the algos. So where this are right now, these dots are 6.6 minutes in the future. So I use this like if I'm on a high volatility day, this is projecting that we're 6 minutes out, 52, we're currently 56, like 4 handles lower. This is the 200 period moving average, which is a roughly a 16.6 minute moving average. So it's kind of interesting to use this, but it also shows you how the algos and the predictions are doing. So if you have the indicators, you can go in. You have to have a premium and a real-time quote so you can get this. But it just kind of gives you the whole stability. So we've already, for the most part, stabilized. If I come back and go to come back here, you get this volatility bubble, and this is a theory. If you have the indicators, the orange line is the market grid, and what happens is the market grid, it sort of acts like Bollinger Bands. Bollinger Bands are standard deviation lines. These are more static lines using the bar range. So the 3-bar range determines the widest part, and then there's used to find the support and resistance numbers within a bar. So it could be like this, a 5-second bar, or it could be a 1 hour, 5 minute, any of these. And it will, if you look at these charts, it will show you that very seldom do we break out of any of those ranges. So you have about, it's around the 88% chance to be exact. It's roughly 88% chance that we will stay within the confines. So if you're trading, you can trade against those outer lines, and depending if there's a trend. Very few people have ever done what I've done, and that is actually keeping daily logs of what the Fed does. I saw some guy, he used to work at Goldman, he's trying to act like this is a phenomena that only has happened since the GFC and all that. It's not. In 1980, I kept logs of what the Fed did every day, all their open market operations, things of that sort. I used to do my own money supply estimates because that was the big thing. Back in 1980, interest rates at 15+%. You're looking at then was a money supply every week. They used to bring it out on on Thursday, and then Friday would blow up and it'd be a surprise money supply. And that was everything, money supply, probably for about 3 years, money supply and these open market operations. So these aren't anything, matter of fact, they go back, I think, to World War I was the first time, like right after the Fed was even formed, they were doing these things. So, yeah, so we've got some volatility out here. If it stabilizes, I start to see some patterns. Maybe we'll do some trade setups here. But we'll see what Powell says on his opening statement. But, you know, so the two dissenters, all of a sudden, that's going to be the headline probably everywhere. Two dissenters on the Fed don't agree. And of course, the one Trump guy that put in there, you know, he wants yields at zero. So we get it. Yeah, if you guys have any questions, we can chat about some things. Let me just see what's out there. 3 dissents. Yeah. Who cares? They dropped the rates. Tom Popovich, give me some more information on that. I'll try to do my best. Yeah. Remember Microsoft after the Friday close of the pit? Yeah. Hawkish cut. There you go. Keeps refreshing. Oh. Yeah, usually at half past the hour, so give me a heads up if we get going on something. Yeah, so we're looks like there's a scalp coming here. Just trying to grab $2,125. We're close. It's kind of bouncing around here. The liquidity is hanging in pretty good. I'm trying to go for 1625. There we go. So I grabbed $1,600. It's like a picking low-hanging fruit. There's probably more in this here. This is starting to get what I call a veil top here, where all the linear regressions are starting to roll over. So Yeah, we'll entertain ourselves. So if you notice, we're trading within the market grid. I'm trying to buy down at the bottom end of this market grid, and there. So I took another almost $3,000 out of there. But this, these patterns here, when they get like this, will usually consolidate and normally come back down into this type of pattern. So, all right, let me come back up here. Sorry, just usually I do these things. I don't get to make any money while I'm doing it. Let's see if you guys have any questions here real quick. Yeah, I don't know what to say. If it's going to help Trump, he's probably not going to say anything. Yeah, these type of formations here, they just tend to hang on. So I'm displaying this on my Mac desktop. So I'm just doing a remote PC, so you can see TradeStation on the Mac here. Yeah. So we're still. This is probably the best. Let's go over to TradingView, because I want to show you. I want to show you this pattern that is set up here. Let's just pay attention here to TradingView. If you notice, way down here at 68.46 in the upper band is at the 68.84, and we're working in the middle range here, and this volatility has to collapse in before we're going to get a directional move. You can see the red dot forecast is forecasting we're going to come down into the 10. I think we just go sideways, and each 5 minutes we start to get this to narrow in a little bit. Where are we at? So we got about 12 minutes to Powell coming up. So let's talk about what we know, and I'll go through this, and I'll put more in on the Substack. There will not be a video tonight. This is the video for today. So, but when we get this explosion, this move up, it's not that big. Sometimes we get giant ones, but we get this blow up. You'll see. I'm just trying to get this in range so you can see that the top of this orange here and down here. Let me draw it in, because I always worry that you guys aren't seeing the same places that I am. So let's put the drawing tool here, and so this right here is what I'm talking about. Is right here is the bottom of the grid, and this is the top of the grid. And basically what's going to have to happen is the grid is just going to start to collapse down. And once the market's trading in this area here, then we'll be able to figure out if there's going to be a move out of here or not. And that's probably about a half hour, maybe 5 to 7 bars from now. And when you're looking at setting up trade setups, you have to, especially out of a pattern like this, it's going to be completely random at this stage. So if you're trading on any news days or any anything where there's a big bias for the day. There's no bias to this. I mean, we're looking at right now, we're up 18 handles, but that's nothing on an index at 60, almost at 6,900. So we're looking at 0.27. So pretty low volatility day here. And if you're trying to set up a trade here, if we're patient, I think we'll set up. I already ripped like $6,000 out of here without trying. But the point is that you can scalp around a little bit, but you even have to be careful there because it decides to make a movement. Now you can see we just got an update, and this turned up and this turned down. So what we're working toward is getting I always refer to this time zone as normalization. So you need to have the patterns normalized so that they start to react and respond how you would expect them to, meaning more orthodox. If you get too much volatility, then they're just randomly bouncing around. And I should be able to bring this up. Is it going to let me? No, it won't. Hang on, I've got to get rid of this. So you can see it's starting to normalize. It just takes a while, and now we're just randomness. You try to trade in here, you're just going to get whipsawed. So if you're patient enough, especially on intraday trade, after a news event like we just had, now there's going to be another spike in volatility because Paul's going to come up and speak, and there might be some more reaction to some of the things he's going to say. So you get the first shock wave is on a Fed day like this, right? You get the first shock, usually can fade that first move. It'll pull back the other way. I successfully did that. And then the next phase, you'll get an echo bounce. And now we're waiting for this normalization on a 5-minute chart. But by the time it gets there, it's going to get kicked in the pants again, probably potentially by something Paul will say in the next 10 minutes or so once he starts talking. So once all that is done, now you've got all the information, and it's just little things that might happen. Well, we should be able to find some trades. So I wanted to show you folks how to do the trades and trade setups here. So this is the 5-minute, and then you can see what it looks like. It's forecasting right into the top of the hour. So once Powell talks, we're 8 minutes away from that right now. Then what you'll get is it looks like we're going to start to see a steady attrition coming down. Maybe we'll get back down, change to go negative. There could be an 18-handle trade. So you can see now in the 5-minute chart here, just above, it's starting to come more and more in. It's starting to sell off already. We should see it stay within this range, though. Patience and this is how you learn as well. So we'll watch this a few more minutes while we're waiting for Powell to come up. Yeah, I always call Zero Hedge the place to go to find out what's not going to happen. So what does that mean? What are we supposed to do with this information? It's the most divided in 37 years. What does that even mean? They still dropped rates. I'm like, so what? Why does that even matter? So much has been put on the Federal Reserve and their committees to do something, and they have very little real effect except for we're selling off again. I did see that. So right now we're coming down to the 10-minute. You can see the dotted red line is forecasting down into this level here. Yeah, so a couple of things are happening over here on the TradeStation trade setup. It really made me mad because TradeStation, I've been with TradeStation since 1992. In fact, I was the variation provider on the platform. Bill Cruz and I sent out 250,000, I guess, emails. It wasn't even emails, letters. We sent postcards and letters in the mail. We didn't have email hardly then. I might be a little early on this trade. Don't do this at home, kids. Let's take a look at we're right on that line here. I think we get, see how this thing continues to narrow? This is what I was talking about. We got another downtick. If we can close just a little higher, we should get an uptick, and they're gonna collapse, and then we should hold into this support levels right now. That's not good. This thing is not working. I'm watching it above. So hang on here. Gonna have to close that. Bear with me a second. I'm just working out of this trade here. Just still pressing it down as we're coming into Powell here. All right. Let's see where we are. About 1:30 to go here. Yeah, I'll get this thing back up on the screen here in a minute. There we go.
Happening since the decision at 2, which was initially we saw this big positive reaction, as Brian mentioned, it pushes the tech ETF, the XLK, now possibly a 13 consecutive day of gains and a winning streak. However, look at what's happening on the screen now. We're already seeing this pre-Powell positioning where those gains that we had are coming out of the market. So the tech XLK is down about 0.25%.
A second, folks. Okay. Yeah, we'll listen to Paul together. Just waiting for him to come up. Trying to get the PC back. Yeah, so when you were talking about the short position, for the most part, and I haven't figured out how to teach, yeah, this thing doesn't want to come back up for some reason. That's a bummer. All right, Paul's up. Oops.
Supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments.
A year later.
What are you listening for as he's
Sorry, we'll get it straight here, folks. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be of risks to employment and inflation. Today, the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 0.75 percentage point over our last 3 meetings of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning, and should be used when economically sensible. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
So, what I've been doing here while you guys have been watching me, listen, I can't get one browser to work. All my programs work, but nothing, I can't get TradingView, I can't get nothing to display. So I guess maybe last night's disaster maybe is something deeper. I don't have that much running. So you guys are hearing me and everything, okay? Just give me some heads up here, because I'm feeling lost here. Yeah, it's very similar. I can't see if you guys are doing it. So, let's do something here. This is very frustrating. It's the second stream that has blown up. So, yeah, I'm even trying to get Discord to come up and it's not coming up. So, yeah, nothing seems to be working. It's almost like, I'm assuming you folks are hearing me. I apologize. When you're, yeah, it's not working here. Yeah, so let me know if you can see anything on YouTube. It appears that everything's collapsed again. Okay, good. Yeah, folks, I'm just trying to get some out. Nothing seems to work on this computer again, so I'm going to have to do some investigation. I'm so sorry. I had so much I wanted to do with you folks today. We could close this out and try to come back on. We've got like 200 and some people here, and I'm just really frustrated. I have no idea what's going on. I don't know if it's Streamlabs, but you can see me and hear me. I couldn't even pay attention. I was trying to get everything working so to come back on. Yeah, so nothing will work. None of my browsers will show anything streaming. So that's what's concerning me. I'm not sure exactly what's going on. Let me try one more time. Yeah, I just get a spinning wheel on TradingView. So I apologize. Trying to get this working. We got a reasonable retest of the low. Made some nice money on that one long trade that I put on. But anyway, I think what I'm going to do is I'm just going to reboot. I said there won't be a video tonight. I will try to come back up. I'll put some stuff out on Twitter. I need to make sure this doesn't happen. This is 2 streams in a row that for some reason, I don't know if it's the Mac, because a Mac's very sensitive about showing outside sources. All my main sources, like here on Streamlabs, is working fine. So I'm not sure what's going on. There's something blocking Substack tonight, and I'm going to get to the bottom of this. This is what I'm doing until I figure this out. So thanks again for tuning in, and I'll let you know. Just watch, put the notification bell on. I'll try to come up, hopefully have everything fixed later tonight. Okay, thanks a lot, folks.